All right, thank you so much for staying with us. Now, the International Monetary Fund, IMF, has projected that Nigeria's economy will grow faster than that of the United Kingdom and several advanced economies in 2025. Following an upward revision of the country's GDP growth forecast from 3.0 to 3.4%. The revised projection was contained in IMF's latest World Economic Outlook report, released last Tuesday. It marks a 0.4 percentage point increase from the fund's April 2025 estimate and places Nigeria ahead of countries like UK 1.2%, Germany 0.1%, Canada 1.6%, and the United States 1.9% in terms of expected economic expansion. The report comes on the heels of a rebased exercise conducted by the Nigerian National Bureau of Statistics, NBS, which updated the country's GDP to 372.8 trillion naira. That's about $243 billion in 2024 from 314.02 trillion in the previous year. My guest is Professor Ken Ife. He is the London Enterprise Ambassador, Chief Economic Strategist in ECOWAS Commission, driven by purpose and passion in pursuit of excellence in engineering, technical services, enterprise development, and public policy. Prof, good afternoon and thank you for joining the program.
Good afternoon and thank you for having me.
Prof, I think I should first allow you give us your own understanding of this write-up. Considering the challenge that we face as Nigerians, when we see these figures, sometimes many don't even understand what it means or what the story is trying to tell. Upgrading our growth forecast from 3% to 3.4%, what does it basically mean for our economy that is coming out of all of the challenges faced after these reforms by the present administration?
Okay, we just recently rebased our GDP, taking a base year of 2019 compared to the last one that was 2010. And then the rebasing showed a massive increase of about 41.4%. The one that was done in 2014, using 2010 as the base year, returned an increase of 59%. So this is a bit lower, but still definitely an increase. But when you look at the three things are playing at this. One is the first quarter GDP figure for this year, 2025, showed a growth of 3.13%. Now, normally, this should be the lowest in the GDP growth rates, the first quarter. You always tend to have the highest in the last quarter. So compared to the previous quarter, which was 2%, it's had much higher. So you know that it's a good sign that we are going to hit over 4% anyway, without a doubt. The second point is that oil is outperforming everybody's expectation. As at yesterday or so, they said it's 1.8 million barrels a day, which is significantly higher than what we have seen over the last few years. So that is giving us positive growth. If you look at the things, about 13%. So we had positive growth of the oil, about 13.81%. So that is good. And don't forget that the third one is services, growth in services. In fact, non-oil growth is also high, but the main component that gives us confidence is the services. Services in that quarter was 4.35%. And the service sector accounts for 57.5% of the entire GDP contribution. So that is a quantity that works with the oil growth to give them the confidence that we are going to hit that 3.4, even exceed that by any standard. So those are the driver that are seen. Not just what happened over the last 10 years. No, it's what is happening in the first quarter going into the second quarter. We're having all signs are positive.
Prof, it's a good way to start, but despite this, I would like to say that Nigeria remains fourth largest economy in Africa, behind South Africa, Egypt, Algeria. And, that is something that some say remains very worrisome. How does that also come to you? And what sort of investors' confidence do you see this positive news also driving?
I don't think the investor confidence is predicated on those numbers called GDP, nominal GDP. They look at market conditions and they see what you are not expecting them to see.
Okay.
They're looking at insecurity and they're looking at unit costs and production costs. They're looking at power, electricity costs. The band A is 220 naira per unit. They are looking at transportation costs that are so high, and thanks to Dangote is now ruling out 4,000 trucks to reduce all that cost and then give predictability on that. So all of those are what they're looking at anyway. But even then, GDP does not put food on the table. GDP does not pay your bills. It is not what is going to service the debt. What is going to service the debt you are incurring is revenue to GDP. That's what is service your debts. But in any case, I can join issues with you on the $1 trillion economy. Nigeria is a $1 trillion economy. I don't know how many times I'm going to say that. The GDP purchasing power parity for Nigeria is $1.28 trillion. It's not this shenanigan called GDP that you see every day, changes every day and dances up and down. Let me explain to you. We know that there are two pathways to increase our GDP. One is to increase the productivity, sure, and then all the investments and all that. Remember there are four constructs in GDP. You have the household consumption, you have the company investment, and then you have the purchasing, the public consumption, which is around 6 to 8%, 10% at maximum, where household is about 78%. Then you have investment, and then you have balance of payment, which has become positive since fuel removal, subsidy removal. It's about $6.8 billion. So all of these quantities are going up because if you look at in January now, you're going to see a dramatic change because the reform bill has put us in that pedestal to have growth in all of those four parameters. But nevertheless, let me ask you, second point, the value of your currency. Now, whatever you see as the value of your GDP in Naira, it has a deflator you are going to use to deflate it. You are going to be using your 1,535 Naira to $1 to deflate it. And that now gives you 243 billion. But let us suppose, look at what Ghana has done. Let us suppose that you return back to what it was in May 2023 when the new administration took over, which was 500 Naira to $1. If you use that to divide, you will be getting 3 times this GDP to be $720 billion. Just simple, just exchange rate appreciation. Now, look at what Ghana, don't tell me it's impossible. Look at what Ghana did. Ghana impounded their gold and put to reserve and all of that. Suddenly, their cedis have increased by 50% in value. So I know people don't want to talk about that. So if we can fight to get our exchange rate come back as far as possible, if it halves to 750, that GDP of 243 doubles to 480. And if it goes back to what it was, 500 Naira to $1, it becomes $720 billion. That is the thing. So then Nigeria becomes number one again, even if it doubles number one. So it's not the thing. But the purchasing power parity tells you what the actual consumption, what the size of this economy tells you. But when you begin, and what you use in determining it is the notional value. There's an international notional value of dollar. That's what they use to determine the actual size of this economy. And as I said, it's only academic. If the exchange rate improves today, reduce it to half, reduce it to 1/3 of what it was before, the GDP inflates. It goes from 243 to $720 billion. So that's why I don't lose sleep over these numbers that fly around every day.
Prof, let me ask you that this renewed outlook from IMF, some analysts have also argued that it shows confidence in Nigeria's macroeconomic reforms and the resilience of Nigeria's economy. Do you agree to that?
No, without a doubt. Let me even tell you, for Nigeria to be able to pay off IMF 4-point-something billion, shows that we have some money somewhere, and we have the courage to disburse that as a bullet point, as a bullet payment. And of course, confidence will shoot up for you to now suddenly become eligible to borrow $21.5 billion, 15 billion yen, and 2.198 billion euro. I mean, it speaks volume of confidence in your economy, but for people to want to give you more money. So on one hand, it's a good thing that we can get this kind of money, but on the other hand, we have to talk about other things around it, which is about the fiscal responsibility. How long are we? How much are we? Meeting the law that regulates borrowing? Because don't forget, it is on the exclusive legislative list, and there are strict guidelines under fiscal responsibility at 2007 that governs borrowing. I'm not sure how much of it that we have kept faith with, but nevertheless, it is good for a country like Nigeria to be able to, in a bullet payment, get rid of the money we borrowed during COVID, over $4 billion, and then be eligible to get that kind of money. It's not, but I support the idea of borrowing as long as we are using the rules. We are bound by the rules, and we have one of the best fiscal laws in the world, second best, second only to Brazil. But if you look at education, for example, because that law says you can borrow for capital expenditure or human resource development, so which is health, education, enterprise, and entrepreneurship. If you look at education, for example, if you borrow long-term money at 2% or 1%, and then invest it in education, but that money, let's say you borrowed it for 20 years, investment in education gives you a very high internal rate of return. Think about a child from primary school to secondary school to university and then gets to work and then earns salary. The internal rate of return over 15 to 20 years of this child going through all this education is over 20%. But the borrowing is only to 1% or 2%. So it's just a big return when you go there, because human capital investment have other implications. It saves you on insecurity, it saves you also, but it gives you a physical return that is much more than what you borrowed. But could that be said about the other side? That's where we have more issues to deal with.
Prof, again, back to our conversation around the macroeconomic aspect, which we say we are getting right. Analysts, again, have argued that Nigeria seems to be getting the macro right. But what about the micro? When do you think that we will get to that point where it starts to trickle down to the man on the street? Just like he would look at these figures and say, rebased figures, Nigeria grows at 3.13%, but he's more concerned about how to put food on his table. That's really the concern of many.
Yeah. Correct. Because I did say that the GDP doesn't pay your bills. It doesn't even put food on the table.
You did.
See, if you look at the GDP figures, first of all, government is getting it right on the macroeconomic parameters, because we now have a steady exchange rate, and that inspires confidence on investors. You could see them voting with their feet on foreign portfolio investment. We still have a chronic trouble with foreign direct investment. Portfolios coming in and going, but FDI is a problem. But then, notwithstanding that, the first quarter GDP was a disappointment when it comes to agriculture. Agriculture was growing at 0.07%. You might as well call it zero. And that is very worrying. This is the link between what we are talking about at macro and then food on the table and food security. And the president declared food security, food emergency 2 years ago. And he has put a lot of stuff in. He's put over 2 million bags of fertilizers, 2,000 tractors are in, and then, giant steps, but that's not all. There are many other things government, especially the previous government, because we have the same APC government. There are other things that the other government started that are not going on. I'll give you one of them is cassava. That we went in, FEC approved, we got it moving, and then you got a new administration, a new minister, and then they stopped everything because of conflict of interest. So we have to get to the grassroots. You can't have a country that's growing at zero on the agriculture. Population is 3%, and then 4.6% is urbanization. That is crisis. of no mean measure. It's a crisis. And then you're going compounded by insecurity, compounded by high costs, compounded by all other inflationary pressures. That is serious. And that's why you have on one hand seen growth overall, and then on the other hand, you see multidimensional poverty taking a huge dive. That is the problem. That link is missing.
Moving forward, Prof, what do you think should be done, particularly the likes of proceeds from removal of fuel subsidy? The IMF report is advising government to channel all of those funds into some infrastructure projects and, of course, things that would impact the masses. What would you suggest moving forward?
Well, the subsidy, a great thing to do and has been done, but only half of that subsidy was available to the president, which is so unfortunate because NNPC trapped 50% of it, which is what the World Bank said. They trapped them in their inefficient operations. So the president only had 50%. To give most of it to governors, understandably, and then put some for CNG Marshall Plan, and then some on agriculture. But if this guy had all that money, nobody would be quarreling about poverty because he would have pumped it into where it's supposed to go. But secondly, what I keep saying is this: there's nothing wrong with borrowing. America is the richest country in the world, and America has the biggest debt. America, they have the biggest debt, 34 trillion. Their GDP is 20 something. They have the highest debt and they have the highest standard of living. But the thing is this: our law allows us to borrow, and then it says clearly, borrow for capital expenditure and human resource development, and then do cost-benefit analysis to show that that thing is capable of repaying itself. And they say long-term borrowing, which is 10 to 30 years, and they say concessionary rates, which is 2% and lower. So the law is very clear. But let me tell you why the law is asking you to do cost-benefit analysis. Why it's asking you to do cost-benefit analysis is because it wants to make sure, the law wants to make sure that, are you with me? To make sure that there is always a discussion on economic corridors when you are doing investment.
I'm with you, Prof.
Are you with me?
Loud and clear, I can hear you.
What the law wants is this. When they're constructing the law, they wanted to make sure that what is a capital expenditure? Infrastructure or productive activity that is capable of generating the money back. Because you might decide to invest in refinery or invest in TNG or whatever, that is a capital expenditure. But then it says it wants to know that in that discussion, there is you are reflected on economic corridor. So if the road or rail or power, let them go through economic corridor so that they can generate the revenue with which to maintain the road. You can now call in PPP to come and invest and harvest money. So that's what the law expects. The law doesn't expect you to just get money and do anything you like, to borrow money and share it, or borrow money and use it for capital for recurrent expenditure or pay salaries. That's not what the law expects you to do. So you can borrow as much as you can, provided you're on that pedestal of sustainability and also of being capable of repaying itself. Now, the second point about the borrowing is that the law that law 2007 FRA only did one ratio. It only gave us a fiscal deficit to GDP ratio, which is 3% now, to 4%. But it didn't give you the rest of the ratios. It didn't give you the debt to GDP ratio. It didn't give you the revenue to GDP ratio. It didn't give you all those revenues. What the law says is that within 6 months of passing this law, the Minister of Finance should go and advise the President with consulting the National Assembly on all the remaining ratios for federal government, for state government, for local government. It has never been done. So every day, me and you are arguing, is this debt too much or that? The law did not stipulate them, and it should do. It should do so.
Finally, Prof, before I let you go, I'm sure you read the communique at the end of the July MPC meeting, and which rates were still held, tightened, of course, as always, 27.5%. The real sector on the other side is saying, no, we cannot sustain this, we cannot borrow, we cannot do this. But if inflation continues to decline, we didn't say decline month on month, and that's also worrisome. But if inflation declines, Prof, do you think that the CBN might shift its stance at the next meeting in September?
Let me correct you here. The inflation did not decline the quarter to quarter of last month. Actually, it's an increase.
Increase, yes.
I said that. It was an increase.
Yes. I said that, yes.
It is the rebasing that showed a decrease.
Yes.
So don't forget that rebasing. It doesn't show you what is important is what happened last month and this month.
Yes.
It was an increase on food, on energy. So all those are the increase. So how would anybody expect stampede CBN to go and reduce rates when superficially it shows it's decreasing, but practically for that quarter and quarter it was going up.
Yeah, it was.
That month to month.
Yes.
So and also there are so many hostages to this whole thing that you are talking about. You are looking at Donald Trump has fixed our tariff at 15%. And is butchering everybody. Is even going to put another 10% for being around what they call BRICS nations. And he's going to even do 50% more. So this guy is running wild everywhere. And then you've seen that so many other price indicators are still not settling. So it's so difficult to expect central bank to move. So I think they needed to wait and then wait a little bit to see the direction, because don't forget, investor confidence is predicated on stability. And the whole financial system is predicated on stability. They've got the fiscal financial system stability right because the prudential guidelines are religiously being followed month by month, risk-based supervision, and all the indices and all indicators are sound, non-profit loss, and then the capital adequacy ratio. All those ones are steady and good. But the price stability is the biggest challenge, and they're fighting it to tooth and nail. So you can't tell them to simply drop guard. And in any case, all the people were saying that the economy was going to collapse. We have growth. We still have growth in the economy, despite all of those. But the thing is, let me tell you one thing about central bank and the commercial banks. Central banks desires to release pressure.
Review market figures this Monday afternoon. Thereafter conversation with Prof. And let's see, Prof. And let's see what the figures are looking like. Equities trader, Rostrum Investments and